Hi, my name is Paul Marambos. I'm a module leader on the Maaf module. Welcome to this application video, which will prepare you for Virtual Classroom 1. We will develop cost drivers and use them to prepare customer profitability analysis in the second application video. Before viewing this video, please ensure that you have read the case study for Virtual Classroom 1. This table reflects the profitability of Sugarman's 3 geographic regions for the past 12 months and was compiled by the previous management accountant. Note that Sugarman's previous management accountant has, in these figures, allocated the logistics, marketing, and admin costs to the 3 geographic market regions based on revenue. Revenue is not a good allocation basis to allocate logistics and marketing costs to the regions. It's simple and easy, but can distort the costs, penalizing regions which are generating high revenue. So for Sugarman, what would the cost object be? An individual product line, a product category, an individual store, or a customer? As we are looking to measure the performance of the geographic market regions, the most appropriate cost object from the options listed would be the individual stores. When costs are assigned to an individual store, the costs of the stores in each geographic region can then be aggregated in order to provide accurate cost information for each region. In the section that follows, it will be assumed that you're familiar with Sugarman's logistics. If you are not, then please pause this video and read through the logistics section of the Sugarman case study. Now we need to determine the activities undertaken as part of the logistics function. We will then create separate cost pools for each of these. Based on what we have learned about the logistics area, identify the 2 key activities. Please pause the video while you answer this question. From what we know about the logistics area, they perform 2 primary activities: warehousing or storing products when they arrive from the various suppliers and before they are sent to the stores. Facilitating the distribution of products from the warehouse to the stores is the transportation activity. We are being asked to determine the appropriate cost driver rates for the warehousing and transportation cost pools. The word determine is known as a task word. The definitions of all the task words can be found in the module outline. This is an extract. Determine means to establish the most appropriate or most correct answer or course of action from a range of available options. This indicates that for the warehousing cost pool and the transportation cost pool, there are a number of possible cost drivers, but we are being asked which is the most appropriate. We are also being asked about cost driver rates. So how would we approach this question? These are the steps that I would go through with activity-based costing. Identify the activity, allocate costs to the cost pool for that activity, identify the driver of the activity, calculate the activity cost driver rate. We have already identified the 2 activities that apply, i.e. warehousing and transportation, so now we need to work through the rest. The next step is to allocate the logistics cost pool of 6.95 million to each of the 2 cost pools. The information needed for this is included in the background information document. There are 4 expense lines: rent and overheads, consumables, couriers, and wages. And the breakdown of wages is as follows. Upon speaking to the logistics manager, you learn that 95% of the warehouse space is used for storage. All the consumables are used in the warehouse operation. The logistics manager spends 50% of his time managing the warehouse and the remainder managing courier deliveries to stores. Please pause this video and allocate the logistics costs to the warehousing and transportation cost pools. The first step is to allocate 95% of the rent and overheads to the warehousing cost pool and the balance to the transportation pool. 100% of the consumables relate to warehousing. All of the courier costs relate to transportation. Wages are split as shown in the table at the bottom of the slide based on the information that we've been given. And we can now see how the 6.95 million has been allocated to the 2 activity cost pools. We have now worked through the first 2 steps, identifying the activities and assigning the costs to the respective activity cost pools. The next step is to consider the driver for each of the activities. So let's start with the warehousing cost pool and determine the main driver for it. On the screen, you'll see information about the number of deliveries to the stores in each state, the number of order line items delivered, the number of product lines stocked in the stores in each region, as well as the number of stores in each region. The first thing we need to know is whether there can be more than one activity driver for an activity cost pool. In activity-based costing, there's only one cost driver per cost pool. So thinking about what causes the logistics manager to incur more warehousing costs, what would be the activity driver for the warehousing cost pool? What causes more costs to be incurred for warehousing? It would be due to the number of product lines stored. More product lines would mean that Sugarman would need more storage space and more staff to handle the products. Therefore, the activity cost driver in the warehousing cost pool would be the number of product lines stocked in the warehouse. Now let's think about the transportation cost pool and its driver. What would be the activity driver for the transportation cost pool? Thinking about what would cause more transportation costs to be incurred, the primary cost in this cost pool is the courier charge. What drives more courier costs? It is the number of deliveries made to the stores. The more deliveries, the more the costs that are incurred. The number of deliveries is therefore the cost driver. We are now at the final step in answering the required. Calculate the activity cost driver rate. To do this, we would take the dollar figure in the cost pool and divide it by the number of activity driver units to get a rate. Let's start with determining the activity cost driver rate for the warehousing cost pool. To calculate this, we would take the total costs allocated to the cost pool, being 3.015 million, and dividing it by the activity driver, which we identified as being the number of product lines stored at the warehouse. But what is the number of product lines stored at the warehouse? We have statistics for the number of items stocked in each of the state stores. We know that the Victoria stores have the full product range, and this is therefore the total number of product lines stored at the warehouse. So the answer is 186. This gives a rate of 16,210. Remember to always specify the cost driver as part of your answer. In this case, it is 16,210 per product line stored. This is the rate for our activity driver. Our activity was warehousing, and the thing that determines how much cost was incurred on warehousing was the number of product lines held in the warehouse. Now, let's look at the transportation activity cost driver rate. Following the same methodology as we did to determine the warehousing activity cost driver rate, we take the amount of the cost pool and then divide it by the driver. In this instance, we identify the driver as being the number of deliveries to stores. Should we use a total 9,300 deliveries to calculate the transportation ABC rate? The answer here is no. The reason is that due to the shorter distances traveled to New South Wales stores, the charge is 25% of that of interstate deliveries. That means the activity cost for New South Wales is less. Therefore, we need to adjust for this. Here you can see that we have reduced the weighting down to 25% of the original number to reflect the differences in activity levels between New South Wales and the interstate deliveries. This gives 6,150 weighted deliveries. Therefore, the answer is $639.84 per weighted delivery. Note that we have shown the driver rate in the answer. In effect, this is the per interstate delivery. When it comes to applying it to New South Wales deliveries, we will have to adjust this weighted rate. Here is a summary of our answer. Note that in the exam, it is advisable to show all workings. If you make a mistake, you want the examiner to be able to see your workings in order to gain as many marks as possible. Please make a note of any questions you might have and post them on the virtual classroom section of the discussion forum by clicking on the Create Thread icon. Hi, this is the continuation of the application video to prepare you for Virtual Classroom 1. We will now prepare a customer profitability analysis. The requirement here is to prepare a customer profitability analysis of the respective geographic customer market segments. To prepare the customer profitability analysis, let's start with the analysis completed by the previous management accountant. You might want to pause and consider which costs will need to be reallocated to enhance the accuracy of this profitability analysis. Sales and cost of goods sold are directly attributable to the stores and therefore don't require further analysis. Similarly, the store rent and overheads and store labor are also directly attributable to the stores, so it is not necessary to reallocate these costs. Therefore, we should concentrate on how the customer segments, being the stores in each state, consume the logistics and marketing costs. Let's start with logistics. In the first application video, we calculated the cost driver rates for the two logistics cost pools. Now for the customer profitability analysis, we are assigning the cost pool costs to the sales regions. Starting with the warehousing activity, as we already know, not all states stock all products. Therefore, we couldn't apply an equal weighting to each of these three states. Instead, we need to allocate the warehousing cost based on the number of product lines each region has stored in the warehouse. Therefore, the weighting would be as shown. To allocate the warehousing cost to each region, we apply the percentage weighting for each customer region to the ABC driver rate of 16,210 multiplied by the total number of lines stored in the warehouse. This calculation shows the warehousing cost allocated to New South Wales, or we could allocate 34.42% of the total warehousing cost pool to New South Wales. Now let's look at the transportation activity. We can use the driver calculated earlier to assign the transportation costs to the customer segments. If we use the driver rate of $639.84 per delivery, we need to remember that it is appropriate for interstate deliveries and that this rate would need to be applied to the 1,050 weighted New South Wales deliveries. By applying the appropriate activity-based driver rate to the number of deliveries in each state, i.e. multiplying the two, we have allocated the transportation costs to each customer segment. We can have confidence in our figures as the total allocated agrees to the total of 3.935 million in the cost pool. So that leaves us with the marketing expenditure to fairly attribute to the states based on how they consume these costs. Recall from the background information that $1 million was spent on promoting Sugarman's moving to Queensland. This cost should be allocated to Queensland. The balance of the marketing spend relates to campaigns conducted on a national basis, focusing on making sure that customers are aware of their closest Sugarman store around major gift-giving events. The location of stores would determine where the campaigns are run. Therefore, it appears that this portion of the marketing spend should be shared on a per-store basis. Therefore, the balance of marketing expenditure, being $2,025,000, should be allocated to the customer regions based on the number of stores in each region. Again, the final reconciliation shows that we have allocated the $3,025,000 of marketing expenses. Putting that all together, the profitability analysis for the regions looks like this. You can see that we have replaced the logistics line with two separate rows for each of the warehousing and transportation functions. The marketing line has also been reallocated using activity-based costing. But the most obvious thing to note is that in this analysis, Queensland is now losing money. In Virtual Classroom 1, we will use this customer profitability analysis to answer further questions. During the live Virtual Classroom Q&A session, we will also be working through a past exam question, so please read through this question beforehand. It will only take you a few minutes. And lastly, please take a minute to write down any questions you might have and raise them via the discussion forum. That's all for now. I hope that you found this useful.